What's up, everyone? This is Anthony Pompliano. Most of you know me as Pomp. You're listening to Off the Chain, simply the best podcast in crypto. Let's kick this thing off. Peter Johnson leads Jump Capital's investments in the Fintech, insurtech, and crypto and blockchain sectors. In this conversation, we discuss the stages and types of companies that Jump Capital is investing in, how they work with companies, the value that Jump Trading brings, why he is so bullish on stablecoins, and Peter's deep personal conviction in where the space is going, as well as how committed Jump as an institution is to it. Guys, bang, bang. I have Peter here with me all the way from Chicago. We've got a ton to talk about, so thanks so much for coming to do this.
Great to be here. Thanks for having me.
Absolutely. All right, hold on. We're starting already with you got to talk into the microphone. Yes, I've been waiting to embarrass people on the podcast about talking into the microphone, so I just got my first victim. Sorry. What did you do before Jump?
Yeah. So I was a management consultant. I did strategy and operations work for banks, brokerages, and asset managers. Did that for quite a few years. Then saw what investment bankers were doing. Saw financial structuring looked pretty interesting. So went to Morgan Stanley and did financial structuring and M&A work, again, for banks, brokerages, and asset managers. And did that for a little while, and then met the founders of Jump Capital just as they were starting the firm, and took the jump over.
What year did you jump over to Jump?
In 2013.
Okay. And what was the biggest takeaway from all of the structuring and working with banks, et cetera? That's got to be fascinating to kind of see under the hood of those deals.
Yeah, it's really interesting work. For me, total finance wonk. Really interesting doing that type of work. Also saw just how slow financial institutions are. Like, innovation does not happen at big financial institutions. So I'd say that was the biggest takeaway and one of the biggest reasons that I left those types of positions.
Got it. When you joined Jump 2013, any idea of crypto? Were they talking about crypto, Bitcoin, anything? Or was it more in the fintech and financial services world?
Yeah, so when I joined Jump Capital, which is the venture capital arm of Jump Trading, I was just as the firm was starting in 2013, beginning of 2013. Met Mike McMahon and Such Chitness, who are the two guys who were in the process of starting the firm at that time. And I joined them. It was this really unique opportunity to help build a venture capital firm, come in, lead fintech investing for them. And at the time, I'd heard of Bitcoin, wasn't really a focus, certainly wasn't a focus for the firm back at the beginning of 2013. But I started paying really close attention to it shortly after I started. It was, I forget exactly when in 2013. It was actually the kind of what happened in Cyprus where, the government was going to seize bank deposits. The price of Bitcoin jumped.
No pun intended.
Right. Yeah. But that's what first got me like really reading about Bitcoin, and like, okay, like, are people really buying this magical internet money instead of their, keeping money in the bank? Because if so, like, either that's crazy or there's maybe something there.
Yeah. And what did you guys do to figure that out? So I think there's a lot of people who went through that mental exercise and during that time period, and then they didn't do anything. Yeah. You guys went to go try to figure it out in some manner. Was that more of like passive research by like Googling around? You go talk to people? Like, what do you guys do to figure that out?
Yeah. So it was reading everything possible, which there was not a ton back in 2013 to read about, talking to everyone that knew anything about the space, starting to go to early crypto conferences, which were fascinating and interesting, and then bringing the right people onto the team. In, I think it was 2014 or so, actually hired the general counsel from Eric Voorhees from first startup, or one of his first ones, Coinapult, if you remember that, but hired him for a summer to help me get smarter on crypto.
Really?
Yeah.
That's amazing. And so at what point do you guys say, okay, well, we thought that this might be a thing, let's go do some research, to this is a thing and we want to participate?
Yeah, so it was started looking into it from a venture and investing perspective in 2013. And then it was not until, I think, late 2014, we made our first equity investment in a crypto company. So it was a significant amount of time that we spent just getting smarter about the space, looking at opportunities, and also working with the trading team, who in around 2014 is when they started to get active in the market, mainly down at our research lab down at Jump Labs, but started to get into the market, and that really helped push our thinking as well. But yeah, it was a fairly long kind of incubation, evaluation period before we jumped in.
So before we go any farther, I want to make sure people understand the difference between jump trading and jump capital. Jump trading is a traditional kind of Wall Street in air quotes type firm where they essentially trade all different types of assets in a very kind of quantitative trading methodology. But maybe just describe, how did the firm get started and what does that look like today? And then we can differentiate that between jump trading and jump capital.
Right. So jump trading is one of the leading quantitative trading firms in the world.
Can we say the leading?
I say one of the leading.
All right. We're being nice today.
But they are I would say massively successful proprietary trading firm based in Chicago. They've been around 20 years, highly quantitative, highly research-based, trade most every asset class in pretty much everywhere around the world. And just is an amazing firm, what they've done over the last 20 years. Jump Capital is the venture capital affiliate of Jump Trading. We operate generally independently from the trading organization. We're structured as a fairly typical venture capital fund, except the capital that we invest comes exclusively from the owners and employees of Jump Trading. So we also, because of that, work very closely with the trading firm, kind of when appropriate for making investments. So I lead our fintech and capital markets and crypto investments. So I am very often working very closely with the trading side of the firm. Fintech and crypto is just kind of one sleeve of what we do at Jump Capital. We also invest in IT and data infrastructure, B2B SaaS, and media companies. And a lot of those, the vast majority of those, have kind of nothing to do with the trading operation, but just are your more typical venture investments.
Got it. So just good investment opportunities, and really the thread there, I think, across the media, B2B SaaS, and the IT infrastructure, it sounds like is more infrastructure, platforms, et cetera. It's not what in crypto would be called like an application or media publisher, et cetera?
Yeah, absolutely. It's a lot of the kind of infrastructure for those types of companies is typically what we're investing in. It's a lot of data-driven companies. That's definitely a theme. And kind of the way that Jump Capital differentiates itself is, one, it's a thesis-driven firm. So we go very deep in areas and look to invest, develop a thesis of how we think that space is going to develop and invest in the best companies in that space. And then we're also very operationally focused. So the firm was started by folks that were operators. They've built and run companies from startups all the way up to public companies. We've built an operating team. So we have folks that help our portfolio companies with recruiting, especially around data science and engineering. With M&A, with finance, with corporate development, connecting with potential partners and acquirers, with sales and customer success. So we're a very active and involved investor, and that's kind of how we differentiate ourselves, as well as in crypto and fintech. We differentiate ourselves by we're also connected with one of the smartest trading firms in the world.
Yeah, and so when you look over at the fintech, capital markets, crypto stuff. From a venture perspective, how much of the investments you guys make there are companies that could be partners or help the trading firm versus these are just good financial investments that we find interesting in those specific verticals?
Yeah, it's a good split between those. Okay. There's a lot of fantastic investments that we do that have nothing to do with the trading world. We're investors in Personal Capital, which is the best online investment manager, and M1 Finance, which is great for the do-it-yourself investor and allows you to borrow against your portfolio. A lot of companies like that. We're investors in companies like TradingView, which kind of span, like they are in capital markets, but it's not necessarily strategic with the trading firm. And then we're investors in crypto exchanges and futures exchanges, which are very clearly strategic to the trading firm. So it's a fairly wide spectrum.
Got it. So TradingView is a good example, right? We were talking a little bit before we started recording. For people in the crypto world, TradingView is one of, if not the go-to, like chart type platform, right? So you can go in, you can chart a bunch of stuff, and as I like to say, just draw squiggly lines everywhere and tell everyone where you think the price is going. But from the TradingView seat, crypto is like probably maybe one of the smallest markets, right? Or a very small market because they're in equities and all of these other spaces. And so it's funny to me how like the crypto world thinks TradingView is so important, but TradingView has, I'm not gonna say that they don't think crypto is important, right? But probably their larger markets, if you just looked at it from a size perspective, are dominating this little small crypto market. So it depends on which side of the market you're sitting on there.
Yeah, it's funny. You talk to crypto folks about TradingView and they assume it's a crypto company. Crypto is definitely not the largest market on TradingView. Much larger in equities and FX and in other markets. Yeah, it's interesting, but crypto is certainly a big part of what they do and an important part of what they do.
Yeah, and really it leads to this idea of, you're looking at fintech, capital markets, and crypto. Depending on how you slice those three, those could be three very, very separate things, or those could be identical, right? In terms of what company you look at. How do you think about it as you guys are sitting there saying, okay, we're going to come up with thesis. Are they vertical specific, or do you more come up with kind of thesis and future, evolutions of these industries, and you don't worry, is that a fintech, is that crypto, and try to kind of place it in a bucket?
Yeah, right now they're still fairly bifurcated. Like the crypto world and the fintech world are different generally. You're starting to see more overlap, companies that are doing both crypto and fintech things, think like a Robinhood, for example. And then you're also starting to see crypto companies which are building fintech companies, except they're just building it on different rails. Like your investors in BlockFi, great company. Yeah. You look at what they're doing, they're taking deposits and making loans. That sounds like a fintech company.
Mm-hmm. And so how do you find these companies, right? So you guys come up with a thesis. What's kind of, okay, we think exchanges are going to be important. What's that process look like for you guys to go find investments?
Yeah, so we find investments, kind of three different ways. One is just very thesis driven. That's, I would say, the primary way. And that is like, we think, for example, wealth management is going to become digital or kind of hybrid digital. So let's go find out the best company in the space. For us, that was Personal Capital. Or we think kind of fiat on-ramps and off-ramps for crypto around the world are going to be incredibly important. Somewhat obvious, but okay, let's go find the best companies in each country that align with that thesis. We just invested in Bitso, for example, in Mexico, which aligns with that. So that kind of very thesis, this is how we think the world is going to develop. Let's go find the best companies that align with that view. Certainly, I would call that the primary way. We also, find companies through relationships we have with entrepreneurs and with other investors, because we don't have a monopoly on ideas. There's tons of things that we come across that we never would have thought to have a thesis on, but we see what somebody's doing and wow, that's really amazing. And then we also have some systematic sourcing ways to make sure we're seeing everything.
Got it. And what stage are you guys looking for?
Yeah, so we're mainly investing in Series A companies. Okay. So $3 to $10 million initial investments is what's typical for us. We also have what we call a growth equity strategy, which is investing in profitable or close to profitable companies. And then we'll occasionally make seed investments, or earlier stage, smaller investments. I would say in crypto, that's one of the places that we'll look, maybe earlier, be more flexible, just because the industry is so early, and there's companies that, the trading side can be strategic to sometimes.
Yeah. And in crypto specifically, it sounds like you guys are looking at financial service related infrastructure, right? So things like BlockFi, exchanges, Bitso, etc. Same thing there in terms of the split between how many of them can help the trading side, or the trading side can be helpful versus the ones that are, kind of non-correlated to some degree.
Yeah. So in that space, like a lot of them do have like, the trading firm can add significant value, sometimes very, very significant value to companies that we're investing in. But some of them just they're fantastic companies building things that are really interesting, but they have nothing to do with the trading operation. Or maybe they just don't have an opportunity with the trading operation at this time. Yeah. So there's a pretty good split there as well. Yeah.
Got it. And then let's go through kind of some of the theses that you guys have, or places that you guys have been investing. So Bitso obviously is one. They have a lot of fiat on and off ramps kind of around the world. Maybe talk through a little bit as like what that thesis looks like and why you guys are so bullish there.
Yeah. So our view, kind of, I would say, kind of my core beliefs are: one, Bitcoin is digital gold. That's going to be adopted in portfolios. Two is that stablecoins are going to become money transfer rails and FX rails that enable money to move around the world. That three, emerging markets will increasingly adopt crypto assets. And that four, that the infrastructure is going to be developed to enable those first three things to happen. So if you believe those things, like how do people get access to Bitcoin if it's going to be digital gold? And how does, if stablecoins are going to be the rails that money moves around the world, like you need, at the endpoints, you need to go back into fiat currencies at some point, at least right now. So if you believe those things, the gateways in each country that allow that fiat to crypto conversion are absolutely necessary and key to those things happening. So Bitso, we're extremely excited about, one, because you look at remittances. If you think remittances are going to be a big use case, I do. U.S. to Mexico remittances are a massive market.
Like how big do you think that is? Well, you probably actually know.
I do know. I don't remember the number offhand.
Okay. Are we talking just ballpark? Are we talking $1 billion a month? Are we talking tens of billions like on an annual basis?
I don't want to quote it. Yeah,
I
don't remember. Yeah, it's a very large number.
Yeah.
And the amount of remittances that are going through Bitso has been increasing exponentially. Bitso just announced, I think over the last week or so, 2.5% of remittances to Mexico are now going through Bitso.
Really?
Yeah.
And those are all across crypto rails?
Yes.
Wow. And I mean, it's fascinating to me because there's a lot of things that go into that, right? That 2.5% number is impressive just in general, but that means that, one, people who are sending the money got to figure this out. Two, they got to understand the value proposition. Three, they got to sign up, right, and be able to use it. And then four is the person on the receiving end's got to figure out how to use it as well.
Yeah,
it's a lot of steps.
It is a lot of steps, but most of those steps actually aren't happening.
Okay.
Because it's being abstracted away from the end user.
How?
Because the end user doesn't know that they're getting crypto. What's happening, and I think is going to drastically increase, is that, for example, remittance companies are saying, hey, how do I get money to Mexico? I take dollars, I go to the correspondent banking system, they get converted to pesos, they come out pesos on the other side, I'm paying X amount of fees for that. Or I could take dollars, go into Bitcoin or XRP or some cryptocurrency, send it to Bitso, convert it to pesos there, and then I know what my fees are, total cost on that rail. It's just a different rail. And remittance companies are increasingly just looking at it as another rail. And
so Bitso is frankly, it's not interfacing with the sender or the receiver. They're acting more as the infrastructure for the remittance company.
For a lot of that remittance flows, it's completely abstracted away from the users.
Yeah. And so then really it's not the sender and receiver who have to make this decision. It's the remittance companies, which to some degree is easier, I guess, because it's only, a couple of decision makers at a company have to make the decision once, and then all of their volume can, come over and go through Bitso. But two is it's a much harder decision because it's not like the one user who signs up and sends $10. Now you're talking about an entire corporation, understand the value prop and switching over. So there's kind of pros and cons between the difference of being the infrastructure provider versus the end user provider.
Yep, absolutely.
Yeah, it's super interesting because, okay, so you guys got that. What other companies on the crypto side?
BitGo. It's one fairly recently that we're incredibly excited about.
And what's kind of the thought process there?
Yeah, so private key security and custody for crypto is and will continue to be like one of the biggest issues. I know you
anyone want to argue that? Come on. All right.
Just incredibly important. Like securing private keys, it's a bearer asset. Like there's nothing more important than securing those. BitGo is the provider, the wallet provider, the custody provider for a vast swath of the crypto industry. And they have put themselves at one, they're just the trusted provider. They're the trusted name. Like people trust BitGo. And at the end of the day, if you're a custodian, you're selling trust. And they've been doing this for a very long time, and a lot of people trust them. They've also built this incredible network of you have a lot of the industry is custodying their assets with you. You're in a great position to provide settlement solutions, to provide lending solutions, to hold everyone's asset and allow them to transact with each other without actually moving that outside of your custody. Just puts you in a really good place to provide the back-end infrastructure for how the industry is going to work in the future. It is very similar to traditional custodians like a State Street, where it's not a kind of name that a lot of people know, but they're on the back end for a lot of what's happening in the financial services industry.
Yeah. Might as well just keep going through your portfolio. I've never done this before, but we're gonna keep going until you run out of companies. What is the one company in the portfolio that you think people will be most surprised you guys have invested in? Most, and just so people at home know, most of your investments are public, but there are a couple that aren't. So we can only talk about the ones that are public, obviously.
Yeah.
So what would be the one that is known to folks, but would still be surprising in terms of it be kind of a off the beaten path or difference in strategy?
Yeah, Spring Labs
okay.
is a little bit different.
What's that?
So Spring Labs is building a decentralized credit bureau.
A decentralized credit bureau.
Yes.
For like lending services?
For lenders, yes.
Okay, explain this more.
So
how are they doing that?
They are enabling, so the founders of Spring Labs came from Avant, which is a massive online lender based in Chicago. And what they saw is that credit bureaus are effectively they're taking in data from lenders and other sources, and then they're capturing rents by selling that data back to the lenders that they are taking from the lenders.
Good business model. People will buy it.
Great business model. Good business model to be disrupted. So what they're doing is they're saying, hey, how can we use basically blockchain technology to enable lenders to share information securely with each other and get compensated for that while disintermediating the credit bureaus, or working alongside the credit bureaus, kind of depending on who you ask.
So what is the benefit to the individuals in a transaction, right? Whether you're a borrower or a lender, using that decentralized credit bureau versus a traditional one?
It's going to mainly be for the lenders themselves.
Got it. So for the lender, and it's more like accuracy of information, or
Yep. Yeah, accuracy of information, cost of information, things like loan stacking, where people are applying for a bunch of loans at the same time with online lenders. Like, if there is a better way for lenders to simply share information with each other about who has loans with them and who's applying for loans, you can help solve that problem.
Yeah, this is it goes into this trend I probably haven't talked too much about, but I've started to think more about. So a lot of the businesses today that are quote unquote online, they started out as businesses that were not online, and then they had to catch up, right? So this internet thing happened, and like, how do I get my credit bureau, which used to be more in the analog world? Now I got to get it online, right? And so they basically took what they had and they modernized it a little bit, but really they tried to fit what they had to the internet. When I hear like decentralized credit bureau or other people doing, these kind of digitally native businesses, what they do is they start building a high level. It's a credit bureau, but the way that they get there is much more digitally native, much more built for the internet, much more for a global world. But like, it changes, and so decentralization is true in some instances. Sometimes it's not decentralized, but that to me feels like a pretty big shift in the way that people think about building businesses in certain verticals, is because one is built and then brought online, another is built for the internet or for this global digital world. And if you do the latter, it seems like that's a much more scalable, valuable type approach than, hey, let me build it how everyone else has always built it and then just put it online.
Yeah, absolutely. And that kind of spans our investments in fintech and in crypto. Like, a lot of our traditional fintech investments are just like, how can we build something that is natively digital, which can compete, better with these historical businesses that are trying to transform their business to compete in a digital world.
Got it. What are some of the other themes that maybe you guys haven't invested in yet that you're either looking for companies or you're excited about?
Oh, I mean, the lending and borrowing market, we haven't explicitly invested in, although BitGo is certainly in that market. But that is a market that is, absolutely, taking off. It's maturing. Really excited about where that is. So we're certainly looking at, solutions there.
And have you looked at, so right now I think most of the lending and borrowing's happening in what I'll call like true crypto assets, right? So it's Bitcoin, Ethereum, digital dollars, whatever. But have you seen people doing stuff with traditional assets that are tokenized or digitized, or is that still really, really early and more kind of theoretical than people are actually executing on it?
I think it's mainly theoretical.
Yeah, that's what I've seen as well.
Yeah. Like like digitizing or tokenizing assets, I think that the most interesting part of that by far is currencies, effectively stablecoins. Like, how do you bring stablecoins or fiat currencies into an open network kind of that is freely tradable? I think that is the first kind of major shift that we'll see, and that will happen well before, we really see let's tokenize equities or real estate or, gold or other things like that.
Mm-hmm. And what's the fascination with the stablecoins? So, like, you're very, very bullish, right?
Yes.
Probably more bullish than most. One, there's data, right, that suggests that things like Tether, et cetera, are being used pretty widely. But what else kind of drives that bullishness for you?
Yeah, so one is just looking at the data. Looking at Tether, for example, there's been shown there is huge demand for U.S.-denominated settlement and trading accounts for folks that don't have access to the U.S. banking system or want to trade in places that don't have access to the U.S. banking system. And more generally, if you look around the world, there is strong interest in a lot of places in having USD-denominated savings. Like Venezuela, it seems like they've embraced dollarization. So how does that happen digitally? stablecoins is, in my view, the best way that happens.
And so, like, let's take Venezuela or even like other more kind of nefarious actor / sanctioned countries like the Irans, North Koreas, etc. Part of the knock against the USDCs, GUSD, True USDs, all of those types of stablecoins that are originated here in the United States is that they're still heavily regulated right now. Put that in kind of air quotes for those listening at home, because they can be stopped. Assets can be frozen, they can be seized, etc. I think Tether, for example, is much more kind of unregulated, kind of outside of some of those controls, etc. Do we get a world where there's consolidation around one or two of these stablecoins, or do we see kind of a plethora of the variations and it's kind of a buffet, like pick what you want depending on what you need?
My inclination is that there'll be various stablecoins for various degrees of regulation. So like Tether is like an unregulated open network. Mm-hmm. And I don't think that's going away, at least in the near term. I think Tether's market cap will increase over the next year. More people will be using it. I think that there's going to be a very large market for regulated open networks, which are coins like USDC.
Why do you, sorry to interrupt, but regulated open network, the regulated part makes sense. When you talk about open networks, is it open because theoretically anyone can come use it? Is it open because like how do you come
exactly? Yeah, and I think that gets to the core of why I'm so excited about stablecoins.
Okay,
is because it's an open network. Is that anyone, if you have a crypto wallet, you can receive dollars in USDC or other stablecoins. Mm-hmm. The banking system, the traditional banking system, is a closed network. You need to onboard with a bank to get into that network. Mm-hmm. Or if you're a business and you want to have, say, real-time settlement, you can go to Silvergate and you can onboard into the Silvergate exchange network, but that's a closed network you need to onboard into. With stablecoins, you have a US dollar open network that anyone with a crypto wallet can join. Mm-hmm. Or for Mexican peso, it's an open network. If you are a US company that wants to own pesos, someday there will be a peso stablecoin, and you simply need to receive a peso stablecoin in your crypto wallet to own pesos. So that's where I believe the world is going, and why I'm so excited about stablecoins.
Yeah, it gets at the heart of, one of the things that I don't agree with that's kind of a public narrative or debate is digital currencies versus fiat currencies. Like, to me, it's a foregone conclusion. Every currency will be digital, right? Now, the question comes down to what does that look like, right? So kind of regulated, not regulated, open, closed, but also what is the monetary policy that supports that digital currency? And that's where the competition to me exists, is people now will have accessibility to all of these different currencies. Now there's competition at the monetary policy level. Like, if you're in Venezuela, if you can access dollars, the yuan, the euro, name your other favorite currency, and they're all readily available on an exchange, like a crypto exchange, where all you need is a internet connection, what do you use? Is it brand awareness? Like, hey, the US dollar is the US dollar, and I trust the full faith and credit of the United States? Is it monetary policy? And so now you start to actually learn more about it. Like, what drives those decisions around adoption? I don't know. Like, I don't think there's a clear answer, but that becomes a very interesting world, because right now, usually, what country do you live in? Okay, what's the native currency or the reserve currency of that country? That's what you use, right? Because it's just an accessibility thing. But if you break down those walls and you give choice and have more of a free market competition, like, is that good or bad? I don't know. What do you think?
I think it's a good thing.
Okay, why?
It gives people more choice, and it allows people in places with currencies and banking systems that are not working another option.
Yeah, not all currencies are good.
Not all currencies are good.
Yeah.
So I think that's a good thing, to give people options. If you ask, is it good for people in Venezuela and Argentina and places like that to have other options other than their local currency? I think most people would agree that that's a good thing.
Is it good for the governments?
I think that's an open question.
Yeah. Well, because and not all governments are the same, right? So, like, you could argue, I guess one side of the argument would be digitized currencies from major superpowers would bail out the failure of the Venezuelan government to the Venezuelan people, right? So you've hyperinflated away your currency. Basically, your people are suffering. If they don't have access to something else, it's quote unquote good for you as the government, because now all of a sudden you don't have to go come up with the solution. Like, they can just get access to a different currency and kind of stop the bleeding. Vice versa, I don't think there's a lot of governments that want to give up that control.
Or maybe it's like the kind of the escape hatch, or bringing competition into a market makes actors behave better. And are you going to have massive inflation in the country if people have other options?
Yeah.
So maybe that will happen less. Like, I don't know. I'm just speculating at these things, but I think overall, like, it's a good thing, and that it will be because you, for the first time, have open networks because it's always been closed network. You live in a country, your money is kind of the closed network, the money of that country. In 10 years, that won't be the case. You're going to have a lot of options, and that's going to be very different and very new.
One of the arguments I haven't heard that many people talk about that I would love for somebody to argue, I'm not even going to say whether I agree with it or not because I would have to think about it more, is the digitization of the dollar would actually further enhance the dollar's dominance, right? So this idea that if you digitize the dollar, more people have access to it. Because it is the global reserve currency today, more people would adopt it. And therefore, you would actually build a deeper moat around that global reserve currency because accessibility is one of the biggest barriers to that happening. I think that there's a credible argument there. I don't know what the probability of that happening is.
Yeah, I feel like that is the logical argument. I'm not enough of an expert in that space to argue for or against it, but the case that you just made seems very logical.
Well, and I guess it begs the question then, do you think that whether it's dollars, wands, whatever, central banks do this or private companies? So like USDC is technically a digital dollar. GUSD is a digital dollar, right? Tether is a digital dollar, all done by private companies versus the governments themselves. Is that a sustainable model, or do we need the central banks to do it?
I think it will largely be done by private companies like what we're seeing right now.
Okay. Why do you think that?
Because central bank digital currencies, as they're proposed in most places, are issued on private blockchains or databases even. It's basically the government is keeping the records. So like how are records kept is kind of what we're talking about here. Like in the current system for individuals, kind of balances. Right now the current system is banks keep the records. In crypto, we're all keeping the records. In central bank digital currencies, as they're generally proposed, the government is keeping the records. I think in most places, the government doesn't want to or really have the capability to keep the records. Some places like China, I think, would be the exception to that. Generally, I don't think the U.S. isn't going to start keeping the records of all kind of U.S. balances for a whole variety of reasons. So I think that will be done by kind of commercial banks and technology companies, as we're seeing right now.
How do you think kind of surveillance and the nefarious activities of governments play into this, right? So like one of the arguments, Alex Gladstein from the Human Rights Foundation is the chief strategy officer there, has done a fantastic job outlining, I don't know if you could say it's a probable situation as much as it's a potential situation where governments realize, hey, this technology is great because now I can keep track of everything. And if I want to know what my citizens are doing, I should digitize my currency, pull cash out of the market. Now they use this digital wand, digital dollar, whatever it is, and I have full surveillance over all their financial activities. Scary, right? Very scary. But is that enough of a pull to get people to do it? Like to get the governments to do it? How do you think about that?
I don't know. I mean, I hope not. Like that, I think that is the fear when you talk about central bank digital currencies is just kind of what you outlined is the nightmare scenario, or the scenario that people worry about. I certainly hope we don't go in that direction, and I don't think we would in most countries. But but that's the concern. Yeah.
Some of them for sure. And then how do you think about corporations interacting with these stable coins, right? So if you look at like a Bitso who's doing more like remittance type stuff, that's one component. But USDC, Tether, whatever it is, businesses got to move money around the world as well. Do you see adoption happening there? Do you have any insight into like how they're thinking about these stable coins or digital currencies?
Yeah, my hope is, and my belief is that long term they will, or at least this will be used on the back end for what they're doing. It's a better way to move money. Like you move 24/7. It's open on the weekends.
I mean, I think that we're at the point now where it's like pretty hard to debate it that it's not better, right? Like it's cheaper, it's faster, it's 24/7, 365. It's available in every country. You're gonna have a hard time convincing me otherwise.
Right? Yeah,
right?
It's pretty compelling. At the same time, like our business is looking at using stable coins right now for moving money around. No, like general corporations aren't. That's not even on the radar at this point. It probably will be at some point, or the vendors that they use will be using this as rails on the back end, which is probably more likely.
Yeah. All right. What other themes other than kind of the stablecoin stuff are you interested in? You said lending and borrowing. What else?
I mean, like market infrastructure. Like, how does this market evolve to look like more traditional markets in ways that it should? So that's something that we look at a lot because we are very close to the traditional markets. So things like different types of companies in the crypto market focusing on their core competencies and kind of getting separated out into like, should an exchange be a brokerage and a custodian, and does this all really belong together? Or should there be companies that are really good exchanges and really good brokerages and really good custodians? That's something that we think is certainly like the market is maturing and it's going in that direction. So we look to certainly invest behind that trend.
So in traditional markets, there's definitely folks who come from the traditional world who look at crypto and they're like, I can't believe that the exchange and the custody provider are the same, right? Or some other variation of these different components being vertically integrated. Is crypto different? Like, is this time different? Or do you think that whether it's regulation or just market forces force these to separate and become different service providers for whatever reason?
I think that generally it makes sense that they are different companies that are providing these services. If you look at, because the core competencies that you need for each of them are different. To be a really good brokerage, you need to be really good at acquiring and servicing customers. For being an exchange, it's really about bringing parties together, having that network effect of liquidity is kind of the key to having a successful exchange. For custody, it's security. It's securing, folks' assets, especially in crypto, is the most important thing. So why would the same company have all those different core competencies, which are very different? So I think it's very natural that they get separated into, best in class for each of those. I think you see that even, Brian Armstrong at Coinbase recently said that, the Coinbase, like they're separating the brokerage from the exchange, which makes it, and the custody piece, like they're breaking it down just like you would expect from a traditional market. So I think that the crypto market is learning from traditional markets on kind of what works in traditional markets, but they're also learning what didn't work, and like they're going to like kind of take over places in the traditional markets that they can improve upon. For example, like why are markets not open 24/7? Like that's absurd. Like the crypto market is open 24/7. Like why are markets not accessible to everyone? The crypto market is accessible to everyone. So I think that that's where we're going into a future where you're going to take the best things from the traditional markets, the crypto markets is going to learn from, and they're also going to improve on the things that aren't ideal in the traditional markets.
So this is one of my favorite topics, which is every once in a while I'll see a tweet dunk, which essentially is somebody quote retweets some announcement and says, congratulations, you learned finance. And it's usually somebody from Wall Street or the traditional markets realizing that the crypto world was unsophisticated in some aspect, right? And the announcement is basically getting to kind of a comparable position as the traditional market. So could be something around regulation, around custody, whatever it is. And the reason why I like talking about it is because I think from the finance perspective, a lot of folks are like, hey, idiots, like we've been doing this a long time, like we know what we're doing, right? Which, okay, that's a position to take. I think the other argument, though, on the crypto side is, wait a minute, just because you do something the way you do it doesn't mean that there's not a better way to do it, right? And those two forces collide a lot, I think, in crypto. And I think what you're saying, if I'm understanding correctly, and correct me if I'm wrong, is if you start out saying, well, maybe there's a different way to do it, sometimes you're actually going to end up saying, well, the way they do it is the best way, and so we're going to do it that way. But sometimes you end up saying, wait a minute, there's this other thing to do, and like it's an improvement on that old world. Is that
exactly
right?
Yeah,
okay.
Yeah. And that's the great thing about crypto is that it's kind of building a new financial system from the ground up. And sometimes you land, well, the existing financial system kind of got it right. And sometimes you land, the financial system got it way wrong, and we're going to build something better.
Yeah. How do you know if you're like from the investor seat, right? When you're talking with a founder and working with them, how do you know when, the existing model works versus we should go innovate or create something different? Is that like a pretty black and white, let's go left, let's go right? Or is it more of you just kind of keep doing what's best for your business, and then you end up somewhere?
I think it's more of the latter. I really like companies that have people that come from both. Like they have people that know the traditional financial space and they know how it works, and then you have kind of more crypto native folks that think they can bring both those mindsets into maybe what works and what doesn't, and what we can improve upon, because it's not always clear.
Yeah, it's It's interesting to me how we're seeing the disruption and innovation, and Wall Street hasn't seen that very much, right? I think the tech world's used to it at this point. They kind of know how this stuff, okay, here's the market cycles. Here's how you go into these large industries. There's very well understood business models. Hey, we're going to execute the platform strategy. We're going to execute this, B2B strategy, whatever. Wall Street pretty much has done the same thing for a long time. And, if you think about crypto starting at the most important component, which is the base unit of account, and having innovation there around, like, let's say a Bitcoin, now getting into stable coins, et cetera, like, can we rebuild the financial system? Can there be a complete replacement, or is this we coexist, the crypto world and the legacy financial world?
Yeah, I think it's definitely a coexist. Like,
okay, why? I'm going to push you on this. Why?
I just have a very hard time seeing a future where, the crypto world displaces the traditional financial world in, the developed markets.
Okay.
I just don't think that will happen. I think that there is opportunities in other markets that maybe don't have as developed of a financial system.
Okay, so you're going to bifurcate. Yeah. Let's say you take the globe, bifurcate, developed, undeveloped, or developing worlds, I think is the more appropriate way to say it. The developed nations, much harder to see the financial system as it exists today completely going away. In the developing world, easier to see that happening, right? Is that fair so far?
Yeah. Yep.
Okay. I don't disagree on the developing world side, right? In terms of if you don't have a lot to start with and something new comes along, it's pretty easy to see people wanting to switch, right? Now, somebody's got to build that, it's got to work, all that kind of stuff, but that's pretty self-explanatory. In the developed world, let's say you're right. The legacy world can't go away. If you were the disruptor, what are the one or two things that you would have to see happen to change your mind? Like what would be, hey, X happened. Oh, you know what? Actually, I think they could get disrupted. And I'll bail you out a little bit with this question. I don't know if I have an answer, but it's an interesting way to think about, okay, we both agree that like legacy world's pretty big. They're pretty powerful. It works. I always joke, US dollar works in the United States pretty well, right? But what would have to happen to say, you know what? Actually, this crypto thing could displace or just completely disrupt the legacy world?
I think you need to find the little places, the edges where crypto is better.
Okay. So you would go more of outside in, you got to start gaining traction somewhere where crypto's better.
Yeah. Like find those places where it's a little bit better.
And is this kind of what you're thinking about with like Bitso and the remittance type stuff?
Exactly. Yeah. Like find the place where it's just like, okay, we need to get, dollars into pesos and get those in Mexico. What's the best way for us to do that? It happens to be using crypto rails. Mm-hmm. So we're going to start using crypto rails, or we're going to start experimenting with it. And then, maybe it's better 10% of the time. So we're going to be using that 10% of the time. And then, crypto markets are getting more liquid, spreads are getting tighter. It gets more than 10%. Next thing you know, all the remittances to Mexico are going through crypto rails because it's just a fundamentally better rail.
Yeah, it's almost like the Trojan horse type, model, right? Where, hey, do you want to get paid in, you're going to send money back to a country that your family lives in, right? So traditional remittance, I'm your employer, and I say, would you like to get paid in the currency that you send, right? And you say, you know what, I'll take 10% of my salary. Well, at some point, you say, okay, give me more. And do you say, you know what, I'm going to send the money I send back, but then the money that I keep here in the U.S., I'm actually going to keep in that currency as well. And now I want to spend it. And it almost like eats into your wallet share to some degree, or your portfolio share. I haven't thought enough about it to know like how realistic that is, but it's an interesting way to, you start on the fringe or like the more like toy, type thing. And then eventually it becomes more serious and like, oh shit, like, 80% of my wealth is in this stuff.
Yeah, like how do you get that little edge? And you talk about like how do you get folks off zero? I think it's the same for like
That's
a lot
fair.
of these use cases. It's like how do you get folks off zero? How do you get part of their innovation budget like using this in some way and trying it? Because it's a lot harder to get it going from 0 to 1. It's much harder than going from 1 to 50 and 100.
Agree. I definitely agree with that. All right, you're bullish. I'm bullish. What's your biggest fears in the market? Like, what do you wake up, and when you wake up, you're like, if X, Y, or Z happened, I would like go do something else.
So That wouldn't happen. I'm
That's a bold statement.
No, I'm hyper bullish on crypto.
Okay,
and,
so
yeah.
what are like the big
so
fears
what
or
I worry about,
concerns?
and I did want to ask you this as well. What I worry about, like what's most damaging to the crypto space, is if regulators decide they want to really clamp down on crypto and just kill innovation, like outlaw holding crypto in the major developed markets that matter. It obviously does not shut down Bitcoin and crypto at the network level, at the protocol level. Like you can't shut that down. That's why Bitcoin is Bitcoin. But if you shut it down, like you cannot hold these things, you can't work on them, like that is just very, very damaging to the industry. So by far, that's my biggest worry.
Okay, so if you ask me the same question, I have two. That's one of them for sure. And again, I think you're saying the same thing of it's not because you shut down Bitcoin, it's because you basically kill the adoption and the innovation, and it's kind of like drugs, right? Like, look, drugs still prevail in the United States in the sense of they're there, people use it, whatever. But if it was legal, there's way more people who would use them than probably not.
Yep,
right.
People are still going to use Bitcoin, and the network you can't shut down. But if you outlaw it, then it's only criminals using it, and like that's a nightmare scenario.
Yeah. So my other one is I call it the self-inflicted wound. Right? There's we rush, something happens, and there's a bug introduced into the code or something where like it has nothing to do with the external forces, it has nothing to do with how Bitcoin is designed, it has nothing to do with kind of a black swan event or regulation or any stuff. It's just simply we all trust that code is being contributed and it's getting introduced, and it goes through a very kind of serious vetting process that's pretty methodical for a reason, etc. But if at some point there was a bug that was introduced, that wouldn't be good. So I think about those two things, which one's external, one's internal, but at the end of the day, they kind of end up at the same place, right? Where it either ends up being not as valuable, or it's a massive, I wouldn't even say it's a speed bump. It's probably a stop sign at that point, right? In terms of regulation.
Yeah. If you talk about what could, effectively, kill Bitcoin, like those are, I think that's probably the biggest two things.
Yeah. What about Facebook and Libra and Calibra and all that? What are kind of your thoughts there?
So love it because it's getting everybody talking about crypto. I think that somebody needs to onboard the world to crypto, which is like one of the very much aligned with our thesis, and especially Calibra, the wallet, kind of that their goal is to onboard the world into crypto. So I think that that's fantastic. I love that. Will Libra eventually look like as it is proposed? It might. Is it more compelling if you just do individual stablecoin currencies? My personal view is that versus a basket. But overall, I think it's highly positive.
I mean, I'll admit I lobbied hard for them to just do it with Bitcoin.
Just do Bitcoin?
Yeah, I mean, because look, yes, I understand that they're saying there's too much price volatility, can't be used as a means of payment, but yada yada whatever. But it's also the most decentralized, is also the most adopted, is the most liquid, and in hindsight, it probably gets you from a lot of the kind of regulatory backlash that they're getting, or at least from the legislators, et cetera. The question is like that short-term pain, is there a long-term gain, right? Versus Bitcoin or stable coins that already exist probably wouldn't have that short-term pain because the regulators would be like, whatever. But is that long-term sustainable? We don't know, right? We may never find out. But to me, it's hard to come out and say like, hey, we're going to create a new currency when you're Facebook, right? And like, even though there's other corporations or whatever, like if I can almost, this is one test I would love to do. I'd love to go ask every single congressperson who created Libra. They would all say Facebook, right?
Yep.
And then if you said name 5 other corporations that are in the Libra Association, my guess is that I don't think that a single congressperson could do it. 5 of the 21.
Probably be tough.
Yeah. Because, I don't think I could. Because the names that most people know? Like if we went and asked people in crypto, they know the names of the corporations that left.
Yeah. The card networks. Yeah.
Right? Like, I could tell you that Stripe was in there at one point. I could tell you that, A, B, C, D, whatever. But the people who are left, actually, like I would struggle to name 5 of them. And so is that good, bad? You can debate that all day long, but I do think that that's part of this as well, is like you haven't seen Amazon, You haven't seen, Google. You haven't seen, like, to me, Tesla is a no-brainer for them to eventually come out with their own digital token, and it's more of like a credit in their energy grid, right? And so all of a sudden you got a Powerwall, you got your Tesla, you got charging, all stuff. Like, why can't your Tesla car pay for the energy that it is using at the electric vehicle, not pump, but like the charging
station? Yeah.
I'm sure at some point somebody there's thought about that, right? And so when you start thinking about that stuff, it's pretty crazy that 11 years ago none of this existed, and now here we are talking about.
We've come
Facebook.
a long way, an amazing way. Yeah.
Right. All right. What one area around the world are you most excited about other than the major developing markets?
Oh, I think that the emerging markets are the most interesting place for crypto by far. So
why? Because there's less competition?
Because there's more real use cases for it.
Okay.
Because if you look at the use cases in developed markets for crypto broadly, like digital gold of Bitcoin is the most compelling use case in my view. If you start to go to places that don't have stable currencies and good banking systems, then it's beyond digital gold. It's actual payments and using for commerce, which I think gets a lot more interesting. So Latin America, Africa, some parts of Asia, I think that's where the most interesting things in crypto are more likely to happen.
Yeah, and do you think that's kind of what like Jack Dorsey at Twitter and Square sees at Binance? Do you think that's kind of why they're spending so much time in these areas?
Yeah, absolutely. Yeah.
Square and Twitter ever merge? I love this conversation because I got to just throw wild ideas at you and see your reaction.
I never thought of that one.
So here's my pitch. I don't have an opinion as to whether it's going to happen or not, but if you said to me it happened and I had to come up with a thesis as to why, Twitter has connected individuals around communication, and now all of a sudden if you overlay it with a payment network, so take paying businesses, right, using Square, and then also paying individuals through the Cash App, and I overlay the communication layer and the payment layer. I don't know what that looks like, but it's something new and could be super valuable. And like, who's the one guy who's super bullish on both of those things and owns companies that do both? Jack Dorsey.
Makes a lot of sense.
Right. And so, because this idea of connectivity to me is, it's new, right? So we know how it works when it comes to communication in individuals. So like, let's say you and I, 30 years ago, live in the world, 2 different cities. The way we communicate is basically faxing, telephone. Maybe we're really, really early to like an email type service, or letters. Right? And that's how we communicated. The second that we get internet connections, we get services where we can communicate, sharing of information, feedback loops, all the things that we know that's great about the internet. Well, like that happened to words and text and communication. When that happens to money, like that to me feels like an even bigger deal than communication, right? But is that really what's happening in crypto? Or are we simply saying, oh no, the people who are already connected via communication, now we're just going to put money in there as well? Like, are we onboarding new people to money, or are we just simply trying to improve the people who already have access?
I think we're moving from closed networks to open networks, and I think that is what happened with communications, with a lot of things that they used to be closed networks. And then
explain that though. Why do you think we're moving to open networks when it comes to money?
Because before the internet, like most things were closed networks. Most things were not accessible to everyone. Like that's kind of the major kind of innovation.
Hard to argue.
Yeah, innovation of the internet is that it opened information up to everyone, and that's what I think we're seeing with money, is that money has been closed networks, and now with crypto, money becomes open networks, that anyone can access money, anyone can access different types of money. So yeah, I think kind of it's that same type of disruption, which is really interesting.
So I don't disagree. What that then leads to is, do we eventually get to a point where there's a separation of state and money? And not in like let me caveat this. I'm trying to be better about not putting people in bad positions. Not in like the anarchist way, right? Like, hey, we've got to take down the dollar for that to happen. But in the sense of, you as a user have a government currency, you have a non-government backed currency, then you've got these like digital hybrids, right, where it's a USDC. So it's not technically the one that the government issued, but it's digitization of a government currency. Let's say those are 3 options. When you have those options, you as a user get to choose, right? Are the other 2 sustainable? Like, will the regulators, will the governments allow non-government currencies, or like you said earlier, kind of that really, really bad case, they come in and they say, absolutely not, we're going to regulate this out of existence.
Yeah, my hope and my vision on how it plays out is that it is different fiat currencies and cryptocurrencies coexist. It gives people options. They can use different things for different use cases to transact around the world, to hold Bitcoin as kind of the asset that I think it will be as part of a portfolio and a store of wealth, to transact in, the different currencies for different, countries that they're in or parties that they're interacting with. That's where I think and hope it's going.
So I go even further. What's the uncomfortable idea in the room? True separation of state and money. Governments no longer control money. If you said in the mid 60s, one day those paper notes in your pocket will not be backed by gold, it's blasphemy, right? Like, no way is that ever going to happen. 71 or whatever it was, right? Happens. To me, the world would look a lot different. And so I don't necessarily think it's going to happen. What I think is that it's a higher probability than people assign to it, right? So it's almost like we're mispricing the probability. And what I don't know is if that's good or bad, right? So let's say that if I went out on the street and asked 20 people, the consensus would be there's less than a 5% probability of separation of money and state. And actually, if you could somehow measure this and come up with an equation, the probability is actually 15%, right? Still, it's only 15%, not very high, but the difference between 5 and 15, pretty material. That's a very interesting, like, we're edging more towards this, like, wait, maybe the world is not expecting something, right? And I don't think a lot of people are talking about that.
No, I mean, does the world go in that direction? My inclination is no, but at the same time, I agree. We, as people, generally underprice the probability of drastic changes happening. So I think that's fair.
Yeah. Is there anything else that you've been thinking about in crypto that you haven't heard anyone talking about? Like, what do you think is important, whether it's for 2020 or beyond, that you're like, man, I wish more people were talking about X? I got them thinking, yes.
I think...
No, come on, you got to have something.
I mean, people are talking about what I think is the other thing we haven't talked about or directly hit on that I think is kind of most interesting is when and how does this become like a real global macro play that we see, like, somebody come out and makes like they're going to be the next Soros and they're going to make their name in crypto.
Okay, before I dig into that, what is kind of the milestone that would put somebody there? Is it they take a lot of fiat and convert it, and then they're very public about it? Is it they make some directional bet? Like, how do you think about?
I think it's like a big global macro hedge fund that publicly,
says we're all in.
We're all in,
right?
We're all in a meaningful way.
Yeah, we believe this is how the world is going, and we are going to put a lot of risk on the table in terms of how we're going to do this.
When Ray Dalio writes his letter that he recently wrote about kind of how the world is broken, or the system is broken, but he, instead of ending it with buy gold, he ends it with buy Bitcoin. Like, I think that somebody like Ray, like, making that announcement could be a seminal moment for the industry.
Okay. I don't disagree at all that would be a seminal moment for the industry. My question is, historically, do the innovators who became the man, right? Because every innovator always becomes the man. Look back in history, Bill Gates was disrupting, and now he is the man. Everyone's going to try to disrupt Microsoft. Same thing happens in finance. So the Ray Dalios of the world, Steve Cohen's, all these guys, they were no names that built into who they are today. Can you get the innovators who became the man to do that, or do you need new innovators to disrupt the old guard?
I'm not sure what do you mean?
So to me, I don't think that you're going to get those big global macro folks, no matter how much time you spend with them on it. I think that it's classic innovator's dilemma, right? Your entire life, you've made money and been very, very good. If you look at money as the scoreboard, you've been highly, highly successful. You've won almost every game you've ever played with one specific strategy, with one specific view of the world, one specific understanding of the system. to get somebody to flip that on its head around separation of money and state, decentralization, digitization, developing world adopts technology before developed world, all these kind of different mechanisms. I don't think you can get those guys to do it, right? I think it's actually the opposite. I think you need young people who those ideas are not as radical to them. Like they almost don't know better, right? They're too naive to know the world works, option one.
Yeah, that it's not going to be, Dalio and Cohen that, do it. It's going to be folks that become the next Dalio and Cohen because of what they're doing.
Yeah. So like what that does though is that puts you in a position where that next Soros, that next Dalio, whatever, probably is already here, right? But we just don't know who that is. Like who becomes them and is recognized as them. One of the anecdotes that I have that blew my mind and frankly made me feel old was I asked my brother who's 23 years old, I said, hey, you ever sent a bank wire? And he said, what's that? And I said, fair, right? I said, how do you send money to your friends? He said, 2 ways. I said, okay. He said, Venmo and Uber. For those that are only listening, Peter's had a pretty visceral reaction to that.
Uber, really?
So Venmo makes sense.
Yep.
Uber, what he was hinting at was when him and his friends take an Uber together, they split the ride. And so he's not actually sending money to his friend. What they're doing is they're essentially combining capital to pay for something. But in his head, his buddy ordered the Uber, and his buddy then, same thing as requesting money on Venmo, his buddy is requesting that they share the ride. So he just hits accept, whether he's accepting on Venmo and the actual mechanism is money's going to you, or we get in the car together and you request to help pay for the ride and I just hit accept. The user experience is saying for me, I accept.
That's interesting.
And so I started thinking about that and I was like, damn, like either I'm an idiot, I'm old, or both, because I'd never thought of it that way. But it just really started to make me think, like, if you grew up with a phone in your hand, right, and all of these digital technologies, fintech companies, et cetera, like that's all you've ever known, you do think about money differently. You do think about these mechanisms and the way that you, conduct transactions in commerce, et cetera, very, very differently than even me, who's, I'm 31 years old, and somebody would have told me, like, I don't understand technology or fintech. I'd been like, maybe not, but here we are.
Yeah. And it's going to be really interesting, like years from now, when you have people that are coming of age that grew up in a world where, Bitcoin wasn't a new thing. Like that's do they have crypto wallets before they have bank accounts? And like, what does that mean? Like, it'd be really interesting.
I want to know how many kids under the age of 18 have Venmo but no bank account. Actually, I don't know if they could sign up for a Venmo account. But I will tell you, what they do have? How many kids have the Starbucks app and their parents put money onto their app so that they can buy things versus have a bank account? Way more have the Starbucks app, I bet. How many kids use either their parents' credentials for Uber or have their own Uber account and their parents deposit money into their Uber account? Way more than a bank account. Like, again, is that good, right? Vertical specific accounts where your parent is still the same thing, rather than me sending you money to your bank account. And, when I was a kid, my mom put $20 in my bank account. I was ecstatic. Go swipe my card and, I was rich. But if today they're doing it on your Starbucks or on your Uber, right? Isn't that the same thing?
Yeah, it's digital dollars that's not directly held with a bank. Like it's abstracting.
Pretty crazy to think about. Yeah. All right. For people who want to pitch Jump, where can they go?
The Chicago VC on Twitter. Reach out to me there.
All right.
Are
DMs open?
DMs are open. Or
why? Why do you have your DMs open? You like it?
So
like
startup founders can find me.
All right, that's fair.
Yeah. Or info@jumpcap.com.
Okay. Twitter, I think, is the best tool in the world.
Yeah, I love Twitter.
Somebody tweeted yesterday, they said, yo, Jack, if you ever wanted to charge us all $1 a month, now's the time to do it. When everyone's glued, there's sports, politics, potential war, like everything going on Twitter. They're like, dude, right now would be a really good time to turn that monetization on. But it's all there, right? And then are there specific types of companies you're looking for right now? Series A-ish?
Yeah, Series A-ish. Typical for Jump Capital, the $3 to $10 million Series A investments, companies with meaningful revenue That is the core of what we do. If there are companies that are, in the trading, investing space, love those types of companies. If Jump Trading can be a partner, liquidity provider, customer, strategic partner in some way, that's even better. Absolutely love to hear about kind of anything there.
All right. Any last parting words before we get into the rapid fire? Anything you want people to know? Other than you got a pretty cool Twitter handle, the Chicago VC.
The Chicago VC.
What happens if you move? Do you change it or you keep it? Or are you never moving?
Never moving, never leaving crypto, I guess.
All right, you guys heard it here. He's never going to leave Chicago. What's the most important company in crypto other than Jump?
Jump's pretty important. I think the easy answer is Binance, because just the way that they're innovating and like blitz scaling a crypto native company. My view is actually BitGo.
BitGo. Okay, why?
BitGo. Because as we talked about earlier, like they are the infrastructure provider for such a big part of the industry. Private key security is so incredibly important, and I think that there's significant network effects of being kind of the largest independent custodian in the space, kind of the back office kind of infrastructure and services and tools that you can build off the back of that, I think is incredibly important. And I would say, if I would add one more, the sleeper is LMAX Digital, which has quietly built what is probably the largest crypto spot exchange in the world. And I feel like a lot of people don't even know their name.
All right, explain.
Because LMAX Digital, because they're...
So it's LMAX, right?
Yeah, LMAX Digital. I mean, they just put their volumes up publicly. So for a long time, they didn't publicly disclose volumes. They're now up. You can see them. And
they're providing infrastructure where people can tap into?
It's a spot exchange.
Yeah, but it's spot where any consumer can go in and use it, or it's mostly like trading firms?
Yeah, mainly trading firms. Yeah, so they're based in the UK. So a lot of US folks haven't heard of them. Yep. And they are focused on trading firms. So a lot of people haven't heard of them, but that's where a huge amount of actual spot crypto trading is now happening, is on LMAX Digital.
Did you guys invest?
We're partners with them.
Got it. And then you guys invested in BitGo, right?
Yes.
All right. People get all upset when I don't say who invested in what now. I was accused of talking about great companies and not saying which ones I invested in and not. And I said, it's like Jeopardy. You got to figure it out. All right. What is the one regulation or law that you would change if you could?
Bit license, probably. It's just such a hassle for New York.
Yeah. It's pretty crazy it still exists.
Yeah.
Like, my favorite fact about the Bit license is the gentleman who led that whole thing, then left and started a firm to consult people to then navigate it. So I got one rule in politics, which is I wish that there was a rule that said if you're a politician and you get elected into a seat, representative, whatever, we go back and we look at who put you there, right? So whatever industry was your biggest donor, you cannot legislate over that while you're in office. So you're a congressman, healthcare is your biggest donor, you get put into office, you can't actually vote or legislate over the healthcare industry because you're biased, right? I actually think that now when I heard this Bit license thing, it's like same thing. Like, hey, you can't be a regulator, create a law that is so onerous and hard for people, and then turn around and be like, okay, now pay me and I'll help you navigate this.
Yeah, I don't know if you read like Matt Levine, but he talks about that. Like that's the best thing to do as a regulator. It's actually you create really tough laws, because then it gives you a lot of work when you go to the other side and you consult around it.
So I haven't heard him say that, but I get his email every day. I don't read it every day, but when I read it, he's fantastic.
So good.
I wish that he did like a stand-up comedy, right? Like in terms of, he didn't even have to be that funny, because it's kind of, dry humor type stuff with finance. But like if he just stood there and talked about like what he writes about and just like a 1 hour special put on Netflix, I'd watch
it. Absolutely.
All right. What's the most controversial thought you have in crypto that everyone, when they hear it, will disagree?
I don't know if anything is that controversial. I would say that I am much more bullish about the future of stablecoins than most people I talk to.
All right, that's not really controversial.
Not really controversial, though.
I'll let you off the hook. Most important book you've ever read?
Principles by Ray Dalio.
Why that one?
Yeah. So
it mentioned a lot, but
yes.
why?
So Ray, I think, is probably the most thoughtful investor in the world. What I love about Principles is it's about looking down at your career and your life like it's a machine, and really understanding how that machine works and being the designer of the machine, instead of just kind of being part of the machine. And I think that's just a brilliant way to think about your life and your career and everything.
So this idea of being able to step out of your body and take a more kind of transparent, honest view of where you are, et cetera, is very similar to a concept that Jocko Willink, the Navy SEAL commander, has, where he basically, he tells a story, one time they're doing an exercise and he realizes like no one's leading. And all of a sudden he just took a deep breath and he took a step back, like a physical step back, looked around, figured out what was happening, and then just started ordering people what to do. And he said like that's one of the things that he does in a lot of his executive coaching and corporate coaching is like, hey, you can't just be in the weeds every day. Like sometimes you got to take that step back. And I think that's kind of what Ray talks about in other words, but similar concept of just like designing, right?
Yeah.
And being aware of what's going on in a broader picture, which is it's pretty powerful. Right?
Absolutely.
Do you have a second most important book?
I don't know about second most important.
Okay.
I would say most interesting book I recently read.
Okay.
Was Devil Take the Hindmost.
Wait, say it again?
Devil Take the Hindmost.
I don't know what that is.
The subtitle is A History of Financial Speculation.
Ooh.
Yes.
Okay. Devil Take Hindmost?
Yep. Devil Take the Hindmost.
Okay. I'm gonna have to check that out.
Yeah. So it goes through history, kind of every kind of period of financial speculation. So tulips.
Yep.
Railroads, South Sea bubble, and kind of how each of these, bubbles or periods of financial speculation played out. And it is, one, it's just an absolutely fascinating, entertaining read. And two, you can very clearly see some of the ways that things are similar and not to crypto, which has kind of gone through many periods of financial speculation.
Joe, put it back up there. Joe is on top of it. He's got the computer and he is pulling it up on Amazon.
There it is.
My goal this year is to get people to start coming up to me and asking, "Where's Joe?" Because Joe is always sitting in the corner when we record the podcast. He's firing away. All right, aliens. What do you think? Believer, non-believer?
I think there probably are aliens. I think it was the
You're smiling when you're saying this. Why? What's the catch?
So we were talking about this before the show. So I think it's I think it was like the Drake equation or whatever it is, like number of planets. Like,
Drake equation and Fermi paradox.
Yes. So you go through the probabilities. Like, is there probably life somewhere else in the universe? Just based on pure numbers, like probably. Then the next question that you have is, do aliens have pets?
So, when somebody comes in and brings up that question, they've been listening for a long time.
Yeah. So that one really got me thinking. I think that's the harder question. So I was thinking, how many species are there on Earth? So I looked it up. There's over 8 million.
8 million species on Earth.
Apparently.
Wow.
Yeah. I think
that's a lot.
Yeah. Like I'm guessing that goes all the way down to single cell organism type species. And how many of these species have pets?
Did you Google that too?
I did not. I just assumed it was us.
Joe, how many species on Earth have pets? All right, so
if you follow that there's 8 million species on Earth, we're the only ones that have pets, then that's pretty damn rare. So my guess would be there's aliens, but they don't have pets.
Man, I think they got pets.
Think they got pets?
Yeah, just because aliens is so broad, right? Like, I don't know. It brings up the question we talked beforehand. A buddy of mine who will go unnamed because he would be absolutely mortified if I said that he said this, said to me, but your pets have pets. And I was like, what do you mean? And he said, well, your dog has what we call a toy. Humans, right? Dumb us, we call them toys. But your dog plays with an inanimate object that maybe your dog thinks that's its pet. And I was like, damn, that's a really good way to look at it. I don't know if you're right, but like, really expanding my mind right now.
Blows your mind.
And because then it gets into like Toy Story, right? Like what happens if you leave the room and the toys all talk to each other? I think actually in Toy Story one of the toys had a pet.
I think so. Yeah, I think so.
Yeah. All right, Joe, you got an answer for us on the species? How many species have pets? There's no answer. All right, the unanswered questions of life. What one question do you have for me to end this thing?
Yeah, so you talk with a ton of really smart people, investors. What differentiates the top 2 or 3 investors that you've talked to from, the top 10%.
So I'm going to cheat because I actually asked this question to Mark Yusko, who when Mark and I first decided to work together, me, him, and Jason were sitting there, and I said something to him like, explain what you've done in your career, right? Essentially was one of the questions out of many that we talked about. And what I found fascinating about Mark was he was always in the allocator seat for a long time, right? At Notre Dame, UNC, and even at Morgan Creek. And so he has met with thousands of managers, including the very, very top, right? So one of, in Mark's words, one of his mentors and friends is Julian Robertson at Tiger, right? And then you kind of go through that whole kind of era of investors, the absolute best in the world. He knows he's allocated to, all the way down to probably some that ended up not being very good, right? And so when I asked him the question, I said, what separates the 5 best from the 1%? Right, which is essentially the same question you're asking, right? Like the absolute best in the world from the ones who are really, really, really good. And without flinching, I don't even think he took a breath. He said to me immediately, like, oh, duh. He goes, they cut their losers faster than anyone, and they press their winners harder than anyone else. And so cutting losers, I think, is a pretty well understood concept, right? Hey, I've got some kind of risk profile or stop loss or whatever, and if I down at X%, I cut and live to fight another day. But the concept of pressing the winners was one that I really pushed. Explain that more. And what he essentially said is Soros, Cohen, Dalio, all these guys have this knack for what Mark calls doubling up. So in times of absolute despair, when everyone's running, fear, the blood's in the street, etc., they're sitting there, they're cool, calm, collected, and they double up. And so when you think about investing, you don't think about those guys being kind of grand slam hitters, right? You think of them more as consistent returns over 20, 30, 40 years. But if you actually go back and look, like Soros broke a bank, right? My favorite story is, I'm going to forget the guy's name. Who's the guy who chased the naval ship from like Argentina or whatever? The guy, he goes in, he buys distressed government debt.
Was it Loeb?
No. He would probably do it. No, not Einhorn either. I'm going to forget the name, but there's an investor. If you just Google it, he goes in and he buys super distressed government debt and tries to buy it, for pennies on the dollar. And then at some point either tries to get paid par value or basically strikes a deal, right? And says, hey, look, I bought your debt for 5 cents on the dollar. If you pay me 30 cents on the dollar, I'll go away. Right. Sometimes they do it and sometimes they say, basically fuck you and no. And so one of the cases he hired, I think it was like a private army to storm a naval ship that was off the coast of like Somalia or something.
They actually took a ship, right?
I can't remember if they took the ship or not, but like they definitely did something. Paul Singer. Yeah. Elliott Capital. Okay. Yeah. Joe, man, you are on top of it. All right. So Paul Singer, it was an Argentine naval vessel, and they had a subsidiary of Elliott Capital won an injunction in Ghana, in Ghanaian Superior Court, to hold a ship in the port city. And it's like, dude, you're really serious, man. You went after a naval ship of a country and had it held in a port until they paid you the money they owe you. That's
serious.
Wild.
That's serious.
And so it's like, is that pressing the winners? Is that cutting the losers? I don't know. But like that guy's going to really, really extremes that I think a lot of other investors wouldn't do. So that's my answer. It's not really my answer. It's more Mark's answer. But when he said it to me, it's just stuck with me that like cut the losers, press the winners, and that knack for doubling up, I think, kind of separates people.
Has there been anybody in crypto other than Morgan Creek that has stood out to you as, kind of embodying that?
I'm going to answer no. And the reason is I know people who I'm very impressed by. I don't think we've had enough time to see, like, to do it in 2017. Literally, you could have thrown a rock left-handed and, hit some kind of profit. Did you do it in 18? Did you do it in 19? Are you going to do it in 20? Like, we're talking about, for most of the fund managers, 3 to 4 year, history. And one of those was such an outlier compared to traditional markets. That's unfair to say like, oh, you're a genius, you're great at this because of that one scenario. So I think you probably need 2 market cycles, right? You need 2 bulls, 2 bears, get through both of them. If you're sitting there like, Jim Simons, right? If you're sitting there saying, hey, we've done 66% a year, right? Okay, you've done that for 20, 30 years. Like, you're probably pretty good. I think that we just need more time to identify who in crypto could do that. And the big question, going back to your thing about the macro, is that going to be, people like Jump, people like Renaissance, et cetera, that are well-established players in other markets who come into crypto? Or will we see kind of the digitally native investor or firm kind of rise up and end up being that group? I don't know.
We'll see.
All right, we're ending this, frankly, because Polina's calling me and is gonna yell at me if I don't hurry up and go meet her. So shout out, Polina. Thanks for interrupting the podcast. If you listen to this far, now you're embarrassed. All right, listen, Peter, I really appreciate you coming in. This is super fun. We're gonna have to do this more often, but where can people find info at jumpcap.com? You said?
Yep, info at jumpcap.com. Twitter's probably best, just
at the Chicago VC.
The Chicago VC. Yep.
All right, man. Thank you so much.
Thank you, Pomp. Ton of fun.